You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, that music means we are back once again. It is Education Wednesday, a special, very special Education Wednesday, because we already kicked it off with the advisor's option. I flew right on in here from the advisor's option. Man, boy, are my arms tired. But no rest for the wicked, right on in to Options Bootcamp. By the way, if you have never checked out the advisor's option, check it out. It's an intriguing, fun show. It's aimed primarily at the asset managers and financial advisors who use options and how they could use them. There's a lot of education there, which spills over to the audience of this show. And also, a lot of you out there may be looking for an asset manager or financial advisor. You want to know what skills they should bring to the table from an options perspective. Well, that show's all about that. So check it out. If you haven't listened to or aren't subscribed to the full network out there, then go do that. And then you'll get Options Bootcamp and everything else we do, including the advisor's option. And then, of course, if you want to go above and beyond, as always, theoptionsinsider.com/pro, or for you cool kids out there in the Options Bootcamp audience /secret club. That's the place just for you folks to go to get access to our exclusive shows like Options Oddities every Friday, our Pro Q&As every Tuesday. I had a great one yesterday. And then, of course, live access to this and everything else we do throughout the week. And, of course, awesome giveaways, looking at a mountain of cool stuff that's about to head out. We're just waiting for a shipment of some cool merch for you folks as well. And then all of it will be complete. So heading out soon. The next box is coming up soon. Hard to believe. So we're just giving stuff away willy-nilly. You want to be part of that? theoptionsinsider.com/pro. And you know who's also just doing stuff willy-nilly all over the place. Always a busy beaver. He is the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the Options Bootcamp Drill Instructor Proving Ground, sir.
Well, Mark, glad to be back. And boy, we've got lots of good stuff to talk about today here, don't we, my friend?
We do, including our 5-star review. This comes from Jing16. This looks like it's over there on iTunes as well. He says, I'm waiting on Wednesday. Wow. Love it. He says, absolutely love the show! ! The content is thoughtful and presented well. Mark Longo has a way of making very complex material easier to digest and keeps it fun. I listen to the other Options Insider podcasts as well, but OBC is more suited for my current knowledge level, which he puts in parentheses is low. Well, we'll get you there, Jing. He says, so I find myself waiting for Wednesday to come around for some fresh content. I know it must become mentally taxing to cover the basics over and over, but please keep it coming. Grazie mille. We got a fellow paisan there in the audience, Mr. Dan. He clearly listens to the show. We love him. We have to say for Mr. Jing, sir.
I did not know that Shang is an Italian
name. Yes, it's a little-known Italian branch of the family there, yes.
Wow. I mean, calls you out by name. So, wait a minute. Isn't that actually your nickname?
Yes, I was called Jing16 in high school, yes. How did you know? All right, we appreciate all you folks who take the time to listen. And, of course, if you like what you hear, to rate and review. Just like we take the time to answer your questions. So let's get to it. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Welcome to the mail call, the portion of the show where you guys take the reins with your questions, your comments, your insights. We'll start things off by paying off our poll from last week, actually, see what you folks had on your brain last week. And we asked you guys last week, there are many different indicators that traders use to signal red flags in the market. Which quote-unquote red flag indicator is most important to your trading? I guess we all learned yesterday it was really CPI, but I digress. We gave you three choices in the infamous other. It was inverted yield curve, it was backward VIX curve, it was death cross pattern, or other, with a lot of write-ins coming in for VWAP. So that's volume weighted average price. That's a good one as well. And 45.7% of you chose the inverted yield curve. 23.9% went with the backward VIX curve. 21.7% went for the old death cross pattern. And about 8.7% choosing other, which again, a lot of you saying VWAP. So that was a good write-in suggestion there. This week, Dan, we wanted to put this one out again because it's been a while since we revisited this one. And last time we did it, the results kind of surprised me. So we wanted to kind of revisit it. We said, hey, we've seen an explosion of new options traders in recent years. So that brings us back to the age-old question, when did you start trading options? A very straightforward one this week. And again, before you guys mentioned you want the super old school option, we didn't have room for it here. We had to kind of truncate it a bit. So we gave you four choices. You just started this year, so 2022 options babies. Then we had your folks, you came in during the pandemic rush of 2020 and 2021. Or you're kind of a post-great financial crisis edition. So we gave you a wide swath there, 2009 to 2019, right before the onset of the pandemic. Or you're quote-unquote old school, which in our question here is before 2009. To me, if you just started in 2009, you're still pretty new school. But hey, we're limited in what we can do with Twitter. We really wanted to focus on what folks are up to right now and in the last couple of years out there. So Mr. Dan, if you have a vote, have at it. And what do you think our audience is voting for in terms of when did they start trading options?
I am going to say, pandemic rush. I'm going to say that, no, you know what? Actually, I think for our audience, it's still probably old school and then pandemic rush after that.
Well, the last time we ran these numbers, I was surprised that almost 30% of the audience said they had just started in the last 3 to 6 months. So that kind of surprised me. This time, the numbers are a little bit different. Right now, with about a couple of days left, so if you're listening on the on-demand side listening, you still have time to vote over there at options. If it's not pinned, you should be able to scroll down and find it pretty quickly. But right now, the post-Great Financial Crisis, so 2009 to 2019, I get it. It's a wide swath of time, so that's going to encompass a lot of people. That's winning with 47.2%. Then old school right behind it at 30.6%. So this is interesting. This is kind of, a lot of folks coming in back then, of course, 19.4% for the pandemic rush. So a lot of you come in, almost 20% coming in over the last couple of years. So far, only 2.8% started this year, Dan. I find that number a little low. I thought it would be higher, quite. That's why we segmented it out as his own choice. But intriguing stuff. Does that surprise you, Mr. Dan?
It's always hard to tell what surprised you in hindsight, and not armchair quarterback it. But in a lot of ways, I would say no, it doesn't surprise me too much because I don't know why with option traders, because it shouldn't matter, but we have less volume. We have less trading, especially on the retail end, when the market is not a bull market. And it doesn't make sense because you can do fantastic trading options in bear markets and in volatile markets. It doesn't need to go up for that, but we always lose some people. So I can imagine that fewer traders started trading this year as a result of that.
Of course, we just talked about the numbers for August on our last show, the OCC numbers for August, and they were up 13% year over year, Dan, the third busiest month in options history for an August. That's crazy. But so we did see some decent numbers last month, which kind of maybe surprised a lot of people out there. But Mr. Dan, folks are waiting with bated breath. They want the patented Dan Passarelli question of the week. What you got for us this week, sir?
Let's see here, Mark. Well, I'll tell you what. One of the things that I was looking at is Oh, actually, no, here's a great one. One of the things that I was talking about in our chat room recently was straddles, right? 2 days ago, the afternoon prior to the CPI announcement, I was looking at spiders, right? And I was looking at the VIX, and I was like, man, I don't know what's going to happen on CPI. The market could fall a lot, which it ended up doing. It could rise a real lot. I mean, I figured it's probably not going to be a non-event. And so I thought, I don't know, should I buy some puts to hedge my long-term stuff? And I was like, I don't know, it's almost like a 50-50 bet. So I'm going to look at a straddle. And I looked at the VIX and I was like, man, implied volatility is so high. But I looked at how much spiders moved over the past, few weeks and month, and just look at some of the price action. And even though using implied volatility to analyze straddles is extremely important, it's not always the most important thing. Sometimes just that simple hand-to-hand combat, just pattern recognition, like how much can this sucker move on a big number, ended up being the most important part of it. So it was funny. I put on a straddle in our chat room, which is free to everyone, by the way, right now. Our chat room, I posted that trade in the Trade Ideas channel, and another one of our long-term students was like, oh yeah, I actually just did the same thing. And it's interesting. I know we talk about straddles a lot, and it's always a yeah, they're interesting. They're tricky. There's always a long story whenever we talk about straddles. And I guess that's sort of my short, long story today about them.
Well, our audience have some long stories for us. Let's start with this one from Jake Miller. He says, hey guys, you guys do an awesome job on the show. Well, thank you, Jake. Flattery will get you everywhere, at least with Dan. I'm a little bit more of a hard case, but Dan, flattery, get you everywhere with him. He says, I listened to all of the boot camp and I've loved the credit spread episode. I felt like there was a lot of knowledge in it for more insight on how to set up a trading plan. Well, thank you. Glad you liked it. So my question is, I listened to that show and I learned how resistance and support play a big role in when to put on the trade. But then I listened to the episode on things you learned as a professional trader, and I heard mention of you're not trading direction, you're trading volatility, which makes sense. But then why care about support and resistance and just do iron condors on volatile stocks? So I feel like I'm conflicted on the intel I'm getting and would love some clarification on it. You guys are awesome. And if you're ever down in Peoria area, make it known so I can go to the conference or whatever it is bringing you down here. Haha, thanks in advance. Well, I don't know, Dan, first off, do we have a big show planned for Peoria anytime in the near future? What do you think? The Peoria edition of OBC?
You know what, Jake from State Farm, there used to be a traders club there, and I gave a couple of presentations there, but it's they stopped having it. So yeah, I'll tell you what, you build it and we will come, Jake.
Yes, but there we go. The Jake Miller Trading and Investing Club. We will come and do a live show in Peoria. You heard it here from Dan first. All right, but his question is an interesting one. He's kind of talking about two different episodes. Of course, when we're talking about the lessons of a professional trader, we were talking, through the lens of us as floor traders at the time, which of course meant we were primarily trading volatility. That's what we were looking to do. We were looking to hedge out any directional risk we possibly could, hence our delta neutral approach to trading. I don't think Dan and I are really doing a lot of delta neutral these days, as now I guess you can call us the Uber retail now. We're retail like you, just advanced. We just use the same accounts and everything else you guys use now. But Dan, he's also talking about your how to not F up your credit spreads episode as well. So what do you have to say here for Jake? He liked the episode. He liked how you talked about using support and resistance, but he was confused when we mentioned also not trading direction, but trading vol on another episode, sir.
Yeah. And, Jake, this is something that I talk about a little bit in my second book, The Market Taker's Edge. It's weird, but there are two uses of options. The options market is two completely different groups of people with two completely different objectives on their trades, just sort of coincidentally using the same instrument. And so now for retail accounts, and again, like Mark said, he and I are in that category these days. We trade direction, or like when it comes to credit spreads, line in the sand trades, like as long as it doesn't go too much in the wrong direction, like we do that now. But as market makers rather on the trading floor, trading delta neutral, providing liquidity, then that trading, I feel like it's beyond a trading style. That trading discipline doesn't require direction. In fact, it kind of requires you to not care about direction. Otherwise, you can end up putting yourself in a silly situation. So it does seem like conflicted intel, but it was just two different eras in our trading careers. One where we're trading delta neutral and not trading direction, and now trading as a retail trader and trading direction. So stick with the advice that we talked about in the how not to F up your credit spreads episode, and maybe the last one that we did on Credit Spread Genius, and make sure you're using that support and resistance.
Yeah, those are great levels to come in and look at, even just where if you still want to do iron condors or you mentioned iron condors, then you can still set those up around those support and resistant levels. So you can still use the two in conjunction. But unless you're out there running a big market making shop out there, Jake, and I don't know, maybe you are. But unless you're out there doing that and you want to just hedge away all of your deltas and that sort of thing, I don't think you're out there doing a lot of straight delta neutral type trading. So direction is going to play a part in every retail trader's career. And what we've said on this show many times is people fixate almost myopically on delta and on direction, and they come to the game almost exclusively for delta. And that's where they get in trouble, because they don't understand the other components, the other Greeks that Dan writes about in his book that we've talked about many times on this show. They don't understand the impact of theta. They don't understand the impact of volatility. They don't understand the relationship between gamma and theta and all that. So they just look at this. They want to take a swing for the fences. Look at last year, right? Look at last year in the meme stock palooza. People were just loading up on upside calls. Premium level be damned, vol level be damned, delta, all that stuff. They just wanted some directional exposure to the upside. They didn't care how much they paid, what the vol was. And those trades worked for a little bit, for a short period of time. And then, we saw what happened as a result. So if you're just myopically focusing on delta, then you are missing out on the whole other pantheon of the Greeks out there. But a great question, Jake, and let us know how your trading goes in Peoria. Let us know how you're setting up that Peoria club. Maybe we'll get down. I know Dan and I are going to New York to do a panel for the Harvard Business School next month, I believe. So we're going there, but I don't think we're heading the Peoria way anytime soon. Let's get out another J name. We have James Oliver writing in. He mentions that we didn't answer his question, but his question was about how to not F up. Yeah, we answered this on episode 200, James. In fact, we liked it so much, I do believe you won a prize. You won some free access to our pro there. So check your email. Yeah, you mentioned you're looking for episodes with credits. Yeah, I specifically gave you a list of all the episodes that deal with credit spreads on those. Go back and listen to episode 200, James. You should have your answer there. But we appreciate your dogged determination. We love that in our listeners. Let's go out to Albert. Albert says, do you think we'll ever see options trading after hours? The seminal question. We haven't gotten this one in a while, Dan. So maybe that shows people have maybe moved on from it a little bit. But you used to get this question all the time. These days, not as much. When we do get it, it's usually during earnings season. That's when people want it. They see, after hours moving and whatever stock they're trading, Microsoft, Google, Apple, and they want to have a call or put on it. So that makes sense. I understand why they would make that leap. But, it's an interesting beast. I put this question specifically for many years to the folks who run the exchanges and the folks who run OCC, which is, of course, the counterpart to all of your options trades, because we receive it so much from you guys, the retail. And it tends to break down like this. And I also put it to other folks, too. Everyone in the industry I put this question to over the years. The folks on the retail side, the brokers and others, they tend to be in favor of it because they hear from you guys like we do. And they know you guys want it. And so if their customers want it, they are advocates for it. The folks who run the exchanges, less so. The market making liquidity providers, they want nothing to do with it because they don't want to have to staff up and have risk they have to deal with in markets that have to trade and make markets overnight. And OCC is probably least enthusiastic of all, just for the notion that people are very leery of having people have a subpar experience when it comes to options liquidity. And that's kind of what you would get if you did this. You would have very thin markets, very wide markets. People complain now, and rightfully so, if they trade a less liquid name, the spreads are wide. And that's because there aren't that many liquidity providers, and there's a lot of options names, and they can't provide tight markets on all of them. So now if you had after hours trading, it would be some semblance of that. So what people have proposed, and what seems to, if it did happen, it seems it would come in the flavor of some sort of mitigated pilot program, and it probably will be limited to a handful of very liquid names. So all the names we mentioned on the option block all the time, the top 10 most actives, your Teslas, your Apples, your Googles, your Metas, all that stuff, those would probably be the ones that would be limited to. And it probably would be for a limited time too. It might be during earnings season to start. So if we did see something like that, that's probably the way I would see it unfolding. So will we see it ever? Probably in our lifetimes, we will see some sort of pilot like that. Anytime soon, I don't see a huge impetus for it, which is maybe last year there's a little bit more impetus with all the meme stock madness. This year doesn't seem like that's the case. It doesn't seem like any of the folks in the business who would be responsible for getting it done, the exchanges or the OCC, are really super enthused about making it happen. Mr. Dan, is that your takeaway as well, or do you have a different opinion on whether we'll ever see options trading after hours?
Well, I know we've talked about this before, but let's talk about it one more time, just for the Albert. See what I did there?
I like it. That was quite the punny little joke for you, sir. I like it. You were working on that the whole time I was talking. You were cooking that up, weren't
you? Yeah. I was pretty excited about that one. So, you know what? I'll tell you what, like during earnings season, when I'm trading our total earnings domination system, I'll tell you what, like if we always hold those trades overnight, they're a very specific way of trading time spreads. And if I put one on in the afternoon and then earnings comes out in that stock, sometimes you see that stock like way up or way down or whatever it is. And then by morning, it's like the other direction, or like it pulled all the way back, or, you know, like I feel like just from observing that, the overnight trading, because it's so much less liquid in the equities, it's like, I don't know. I just feel like I certainly wouldn't want it to be open after hours. And plus, I'll tell you what, man, it's pretty nice to have a break. When I'm really engaged in the market, I'm really engaged in the market and can't do anything else. You know, I like to have the day end sometimes and usually catch up on all the work.
You know, as I've gotten more involved in crypto over the last couple of years, I have learned to appreciate the respite that options give me, right? Because crypto, you have none of that. It is constantly dinging in your pocket or on your computer, you know? So that little bit of a respite, I used to be more of an advocate for after hours option trading than I am now. Because you're right. I think there is a little bit to be said for just decompressing, right? Isn't that nice?
Yeah, it really is. You know, like they tell you, like some people who are kind of workaholic don't take vacations, and like there's a whole bunch of studies that say if you do take one, you come back much more refreshed and you are more efficient. So yeah, it's good to have a break.
All the mad news that breaks on a Friday, and by the time Monday rolls around, it's been digested, and the market can, you know, maintain some semblance of order. Whereas if it came out immediately during the trading hours on Friday, all hell would have broken loose. So there is something to be said for it. But that said, I don't know, maybe we need to do this poll again, Dan. Maybe that might be a good question of the week next week, inspired by Albert. So we'll do it just for the halibut. And we'll put. Do you think that's a good question of the week, Dan?
I think, yeah, that is a good question of the week.
All right, Albert, you have inspired our question of the week. Sounds like you're getting a lot of credit spreads popping up, Dan. Anything good?
Oh no, I was just closing one of my short squeeze trades.
more meta spreads going up. But Albert, you have inspired our question of the week for next week, so maybe we'll get a fun prize out there for you. And man, we're in a generous giving mode. It's like Christmas. in September here on the network. All right, let's go out to this question from Painted On. I like that handle. Painted on what? What are you painting on? I don't know. I need to know more now. I'm intrigued by your handle. They say, why did Mark say on a recent episode that he thought the heyday of the Iron Condor was behind us? He seems surprised that Iron Condors scored so highly on a recent audience poll. Just asking for a friend. Smiley face. Well, I think your friend may be interested to know. Actually, there's a lot of interest in Iron Condors today. We had the other question. Who was it? Jake also wrote about Iron Condor. Maybe Iron Condors are hot again. Now, I think what you're referring to, Painted On, was when we did that question of the week about a month ago. And you're right. I was surprised that Iron Condors were so hot because when we launched the Options Insider, which is over 15 years ago now, which is crazy to say that out loud, but that is the case. When we launched it, that was kind of right coming into what I would term kind of the heyday. 15 to like a decade ago was kind of really, it seemed like everyone and their mother and their grandmother was really all into Iron Condors. There were a ton of Iron Condor services out there. We were getting hit up all the time by people who had some sort of guru service based around Iron Condors. It seemed like folks had determined that that was the strategy. That was the panacea for all the ills of your options market because, like you said, it gives you direction, it gives you vol, it gives you a lot of things. You don't really have to be right in direction or vol because you can kind of get it in both directions. So it's kind of nice. It makes a little bit more cushion, a little bit more wiggle room out there. And so I think that's why it was very popular. But over time, it seems like it has kind of fallen by the wayside a bit. But maybe, who knows, maybe our poll and now these questions, maybe that's showing we're in a bit of a Iron Condor renaissance. What do you think, Dan? Do you agree that the heyday of the Iron Condor was like maybe a little over a decade ago? And do you think maybe also are we in a bit of an Iron Condor renaissance? Are you hearing this from your people over there at MTM?
Yeah, I mean, it was definitely huge. Even I would say more than a decade ago, like kind of when electronic trading when electronic trading really started getting traction, and I think a big part of that was because like Sosnoff would push those, that was just kind of his thing. And they fell out of favor for a while, but I do feel like there is an Iron Condor renaissance taking place now, based on a few studies and just a few more popular methods that have come out. There's a lot of people trading Iron Condors. Some of the smarter retail money is as well, although that got a lot harder this past several months. I used to do that. I used to do Iron Condors all the time, every week. And then I just kind of, got kicked in the butt a couple of times and figured I'd take a break from that. But
there we go. We are in the midst of an Iron Condor renaissance. Are you out there slinging Iron Condors, listeners? Hit us up. Let us know. Clearly, more than a few of you are doing so. If you are doing so, why are you into Iron Condors? I used to have a good buddy of ours on Volviews who said Iron Condors was an iron butterfly for cowards because you're farther away from the money, a little bit farther away from the fire. He thought if you were truly committed to the cause, you would go for the iron fly. I've always been more of an iron fly guy, but I could see the use case having a little bit of cushion. That's also why Iron Condors are attractive. They're not straight at the money. You get a little bit of wiggle room, a little bit of cushion. So if you're not entirely convicted, the Iron Condor is a little bit easier road to go down rather than the Iron Fly where you're kind of all in. It's a much more all-in type strategy. Maybe that's another good question of the week. Iron Condors versus Iron Flies. The great debate. So many great questions of the week percolating up on our radar. Let's go to this. Actually, this is a fun question of the week, or question as well. We received, it actually came in yesterday, Dan, from one of our pro members during our pro Q&A. I thought it would be an interesting one to discuss here on the show as well today for all the options bootcamp folks out there. This came from Chris Lovell. He wants to know, should retail investors hedge against tail risk for their overall portfolios? If so, what do you think is the best way for us to construct this hedge? This is kind of the $1 million question, right, Dan? People are out there, they're long a ton of S&P or whatever large index. They've been riding it up until mostly this year, when all of a sudden we're seeing, dare I say it, red on the index screen for the first time in a while. And so folks are spooked. They're thinking about putting on a quote unquote tail risk. Now, tail risk can mean a lot of different things to a lot of different people. It's a very subjective term. So maybe we'll start there, Dan. When someone says tail risk to you, what do you think of? And then B, do you think it's worth it for retail to try to hedge tail risk? And then C, the third part, if so, how do you think they should go about it? So a three-parter, a trifecta for you.
Yeah, it's three-part, but they all overlap. And hey, what's up, Chris? Chris is a fellow market taker.
That explains why I can't stand the guy. Oh, okay, now I understand. Now, no accounting for taste.
So, I mean, when I think about tail risk, what I'm thinking about, well, especially tail risk to hedge your portfolio, what I think about is like buying way, way far out of the money puts, like, 3 to 6 month puts on the S&P 500 for a nickel, or 50 cents if it's SPX, but, spiders for a nickel. Like, that's what I think about tail risk, like several, not several, but a few standard deviations out, just buy like super duper cheap puts just in case. And, as far as, is it good for retail people to do it? Hey, man, if it's good for professionals to do it, it's good for retail people to do it. The only difference is the size. And so instead of you having to buy 200 of those puts, you might be buying 5 of those puts. And then the best way to construct the hedge, that's probably, I guess, what we're talking about. I mean, first of all, it's always hard to say. I mean, nobody knows where the market's going to go, but September is typically the worst month for stocks. So we could have a little bit of a further decline here, but a lot of the damage is in already too. So I don't know. For me, I'm not really doing a lot of downside hedging right now, for better or for worse. And who knows? We could be doing a show 3 weeks from now, and somebody could say, "Why is Dan so?" That could be the question of the week. Why is Dan so stupid? Why didn't he buy puts 3 weeks ago?
I have that question every week. Why is Dan so stupid? That's I fight putting that out as our question of the week every week. My producers stop.
I knew I liked Gene for some reason. Yeah, I don't know. I just figure I'll wait it out. I mean, the best way to construct it is when the market is higher, which is when nobody wants to buy puts, which is why they're so cheap. But that's usually the best time to buy puts. And it can be hard because the market can just go up and up and up and up for 10 years like it did from 2009 to 2019. So it's always a little tough, and you got to kind of look at it as a waste of money. But I don't know, like in hindsight, 2019 started looking like a pretty good time to buy puts. I mean, obviously you look at the chart and it was, but at some point the Jenga tower just gets, the PE ratios just get too high, and the rosy disposition of the market is just too rosy. And it's like, okay, maybe now is that time.
Yeah, Chris, there's typically 2 primary ways folks construct these quote unquote tail risk hedges. And the reason why I mentioned that before, it's a subjective term, because it does seem like, Dan, ever since the onset of Taleb and Black Swan, there's been this proliferation of people talking about tail risk and Black Swan. We had someone approach us a couple of years ago with what he termed a tail risk fund. And when we actually dug into the mechanics of it, he actually called it a Black Swan fund, I think. It was pretty much a small allocation to maybe slightly out of the money S&P calls, and then the rest was cash. And that was considered tail risk fund. And that was pretty much just because you're not going to pop from a big down move, but you're taking most of your money off the table. So that's why I say tail risk can sometimes be a subjective thing. But what the traditional, approach to this is going to be, like Dan mentioned, really garbage, far out of the money S&P puts. Another way some people like to go is the really far out of the money, quote unquote, garbage VIX calls. If you've been listening to volatility views for any point of this year, you know that almost the entirety of the top 10 of VIX open interest right now is what we would really term extremely far out of the money calls. You're talking north of the 80 handle, 80, 90 par strikes, 75s across the board. Extreme out of the money calls are just dominating the VIX open interest and have done so for quite some time. And of course, if you listen to, I mentioned I just came off the Advisors Options show. if you go check out some of the archives of that show, we've done a lot of work on that show, especially with Matt. He has a great back tester over there at ORAS. He's crunched a lot of the numbers on these specific strategies, and what works better, the garbage puts in S&P or the garbage calls in VIX. And there's a lot of debate, a lot of interesting data. So we've gone into it in more detail on the advisor's option. I would recommend anyone who's curious about that, check out that show. It's a great show anyways. A lot of great educational material on there. But we've also have gone in depth into this topic with data. And the takeaway from both of them, they both can perform pretty well in specific scenarios. But both of them, too, you kind of have to be pretty quick on the trigger finger. If you have the garbage VIX calls or garbage S&P puts, like a day like yesterday, you got those garbage puts. Those are exploding in the S&P. VIX calls, not so much. We haven't seen VIX do as much to the upside, so that's a conversation for another day. So if you had some of those garbage S&P puts, they popped today when we came up. We were rallying. Now we're kind of giving up. Now we're rallying again. But now with all that fear out of the way, some of those S&P garbage puts going to be reduced a little bit, right? So it's a question of if you want to capture that pop, get the most bang for your buck, you have to be pretty quick on the trigger finger with those. But it's a great question. Maybe it's something we could revisit for a future show. Maybe we'll bring Mr. Matt on. I know he's expressed interest in coming on, Mr. Dan, because he has the actual numbers to talk about, the performance of these different strategies over time, which is always great to intersperse a conversation with some hard data for you folks. You can see exactly how this stuff works. He's also the guy who crunches all of our free earnings data for you guys. So we can also talk about that. So maybe we'll rope him into the fold, Dan, on a future show. What do you think?
Oh, yeah. I mean, there's nobody better to talk to about data like that than Matt. I mean, of course.
Now, I know he's a little leery about doing a show with you. I'll see if I can get him past that, Dan. We'll see. We'll see if we can work him past his issues with the black-hatted one.
Yeah, I mean, I know he can be a little intimidated, but I'll be very gentle. I'll be warm and welcoming,
That's the first word I think of when it comes to mind when I think of you, Dan. Intimidate. Deeply intimidating. Well, Mr. Dan, that music means we have come to the end of our sojourn for this week through the realm of options. Maybe our sojourns will include Peoria sometime. Who was that again? Jake. Maybe we'll hit Peoria one of these days, Dan. But in the meantime, you're kind of on the way to Peoria down there. You're part way. You're closer than I am, let's just say. If folks in Peoria or anywhere else, Dan, want to learn about the magic, the mystery, the mayhem that is MTM, where should they go? What should they do?
Well, make your way on over to markettaker.com, 2 T's in a row. Market, like stock market taker, like take what's rightfully yours, markettaker.com, and join free and be part of our chat room. We, I'm posting trades in there today, trades that I'm doing, trades that, not doing, and, that are worth talking about. So make your way on over, be part of the family. We'd love to have you.
Check them out. Market Taker, 2 T's in a row.com is the place to go. We got to get on out of here, but don't worry. That will conclude our live broadcast for today. We got Brian coming up in a little bit, going at you live to tape for Options Playbook Radio show you very much should be listening to if you're listening to Options Bootcamp. Very much the sister show to this one. Deep dive into all things education with some actionable trading ideas in there as well. It's a fun show. Of course, back again tomorrow for episode 2 of the Option Block, as well as, of course, This Week in Futures Options, Friday Volatility Views, and then back again for you pro folks for Options Oddities, exclusively for you folks. And back again next week all the way through to another Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.